I'm one of the very few people that worked both at Circle and Coinbase. I was in charge of launching growth of USDC at that point. So we took it from zero to half a billion in market cap in that time frame. I think the U.S. equity market is almost a $50 trillion market, and in the crypto market, bounces between one and two. I mean, the reality is the U.S. crypto market is going to be big. If you have a Goldman Sachs, you have a J.P. Morgan, you have a Citigroup.
Welcome in, everybody, to another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are watching all things stablecoins playing out after the huge Circle IPO. That company seeing shares 4x in its debut. Big launch down there. And of course, down in DC, we are still seeing the sausage making play out as the Genius Stablecoin Act approaches a key vote. And a lot of questions around what comes next in the world of crypto, what this huge wave of stablecoin embracement, both by Wall Street and politicians, what it's going to mean for the rest of crypto. And today on Coinage, we have what I would consider maybe perhaps one of the smartest guests in this space we could ask for. Vishal Gupta is the CEO over at True Markets, ex-head of USDC at Circle, and ex-head of exchange at Coinbase. Vishal, thanks for coming on Coinage, man.
Thanks for having me, man. I really appreciate it.
Yeah, it's good to be chatting again. I mean, I think back, you and I met out in Prague. We were at the Blocks conference. We were chatting there about what might come this year. Now here we are, post-Circle's IPO. A big 4Xer there, my friend. I mean, where do you put us right now in terms of where Wall Street is in appreciating what crypto has to offer?
Yeah, I think that investors in general are looking at ways of getting exposure to not only crypto, but specifically the stablecoin infrastructure space. And I'd say, we've been sitting in a world where, we've got a couple of really big winners, both in the exchange space and in the U.S. domiciled, U.S. denominated stablecoin space. But as these things expand, you expect to see more winners show up, and dollars are flowing in. I think specifically investors look at the Circle IPO and they say, how can I get more exposure to this? It's going to be really interesting once options start trading and we really start seeing true markets here. But yeah, it's been great to watch.
And it's been pretty amazing. I mean, I'm curious to kind of get your take, obviously, being at Circle previously, seeing shares price at 31. And then seeing what's happened. I think today they're trading at 113. I think at one point, what was it? We were up above, oh my goodness gracious, up against 125. I mean, Clearly there are a lot of people asking, hey, was this just kind of missed? Did bankers get this wrong? But if you think back to 22, and I can't remember when exactly you were there, but like the SPAC deal, $9 billion valuation, now we're north of 20.
Yeah.
It's kind of, I don't know. I mean, what do you make of that?
I was there from 18 to the very beginning of, I guess, the end of 2019. So, we were in the very early stages of USDC. So I joined just before the white paper came out, and I was in charge of launching growth of USDC at that point. So we took it from zero to half a billion in market cap in that time frame, got Coinbase to kind of come on as an issuer, as a partner. So we saw a lot of interesting things happen. Now, to say anybody could have predicted where this stock actually traded after its IPO, I think it's hard to predict. I think the bankers did their job. The problem here is really like supply demand. I think that the market wants more exposure to stablecoins and stablecoin businesses, and they see this as the future of money. And I think we're seeing that in the market. I do think, again, I used to run a trading desk. I at Goldman for many years, and I'm a derivatives guy by nature. I'm excited to see when the options open up on the Circle on Circle stock to really see how people leg in, leg out of the market.
One of the things that I think is interesting now is we've seen a few people talking on Twitter about the ARB opportunity, and it's interesting because you were both at Circle and at Coinbase, but the idea of so much being made of how much money Circle's paying to Coinbase as a partner for distribution. Sean Farrell, another analyst at Fundstrat, put out over the weekend his kind of analysis into where Circle trades fairly. And this is where, broadly speaking, Vishal, a lot of this comes down to just what is the stablecoin adoption going to look like, really, in terms of how much market share will USDC gain or lose And in his bull case, like maximum bullishness for 26, I think his price target's like around 119. So the market basically pricing in max bullishness perfection for Circle come 2026. And I guess if you back out to that, really the big question is, I mean, where do you put kind of how this adoption is going to continue? And maybe a lot of that hinges on what happens with the Genius Stablecoin Act, where banks get to in terms of adoption. I mean, how do you see that piece playing out?
Yeah, it's interesting. Like you mentioned, I'm one of the very few people that worked both at Circle and Coinbase. I was actually part of on the Circle side. I was part of the negotiation of the revenue split on that side, and then when I was at Coinbase, I could see it on the other side as well. And obviously, those negotiations have been renegotiated recently in the last year or two. So, I mean, listen, people are pricing in perfection here. This is great. I would say we expect the U.S. domiciled, U.S. denominated stablecoin market to grow. The pie will grow, right? There's going to be more dollars in. You're going to see players like PayPal, Stripe, and other players coming in. So I think USDC currently has about 99% of that market. You expect to see the pie to grow, but their share will likely shrink, meaning allowing for fragmentation of the market. And with fragmentation, you expect to see more infrastructure being built. You're not going to just use USDC for settlement and collateral. You'll be able to use PYUSD or any of the other stable coins over time. And some of the things that we're building at True Markets allow you to do so. So I think that the bet on fragmentation, the bet on infrastructure is where we're going, and that's where we see the future of crypto.
No, I definitely we'll get into what you're doing at True Markets to come here, because I think it's important to highlight. I think obviously there's going to be a lot more use cases in terms of, all right, if this market's going to grow substantially and you're going to see an interest among Wall Street, how are people going to use these new tools? And they're going to need new platforms to kind of differentiate in terms of what they want to get done. But on this point, I think it is interesting just to think about the size of the prize. Sean's case, as I said here in the bull, for his model has Circle's market share at 35%. I think right now it's about 25%. So it's still kind of, his model's saying that USDC can gain. I don't know about it, man. I don't know about that.
So I'd say this. He's looking at it as USDC versus the global market. And I still think the global market and the US markets, even in today's regime, is still very different. So we would, when I was running Coinbase's exchange, it would be unfair for us to compare directly with the Binance, right? Like they have a different regulatory regime than we would have. We couldn't list everything they could. So we would separate out US versus global. And I think that that's fair to do in the stablecoin world as well. I think you look at the US markets and you look at the global markets, and like Tether owns the global markets and the USDC owns the US markets. And I think unless USDC comes up with an international version of the dollar, they sit in the US world. And the pie, they're currently at 99% of the US market. That's a big number to maintain.
Yeah, especially as we got RLUSD to keep our eyes on. And we had Austin King on the show from Omni. Ripple invested in one of his companies, or he sold it to Ripple. And so it was interesting to kind of get his take on RLUSD and where the stablecoin market goes. As you have entrants like that, by the way, putting aside whatever kind of banks and Wall Street giants want to get into stables themselves, on top of the tech giants that are now watching this play out. And we'll see what DC's ruling on this is, whether or not they carve out big tech can't get involved. I don't know what's going to happen. But I do want to play a little bit of what we got from Austin King in terms of his prediction back in January, and then get yours in terms of where you see the stablecoin market TAM at the end of the year. Here's what Austin King, Harvard guy, by the way, told us back in January.
In 2025, I would not be shocked if total stablecoin adoption exceeded $500 billion. It might even hit $1 trillion. It's roughly at like 100, I think around 200 billion right now. But yeah, I think this is going to be one of the primary variables that people should be watching in 2025, because liquidity around the US dollar is kind of the foundation of the rest of the financial system of the world.
All right, we're sitting at about the same, basically 250 million in market cap on stables. What does Vishal say about where we get end of year?
Yeah. So if you look at the inception of like the U.S. crypto markets, call it, Bitcoin launches, Coinbase launches, taking dollars and turning into crypto. There's only a very few amount of firms that can do it. There's a little bit of a regulatory capture with having the ability to have bank accounts and turn clients' dollars into Bitcoin. There's really again, Coinbase, Kraken, Robinhood. There's very few ways of actually getting spot Bitcoin and crypto in the U.S. markets. Now, with the growth of stablecoins and like the clarity of regulation, we expect to see even more ways of taking dollars and turning them into crypto, even if it's crypto dollars. So, again, I expect these numbers to go up. I think you're going to start seeing the use cases go up. We've been pushing the narrative of payments for a long time, but I would say that the main use cases are still trading, lending, collateral, both in OTC and listed trading. And even the exchanges are still not natively speaking stablecoins. So we did the work to unify USD and USDC at Coinbase, but you still really can't use stablecoins for collateral and settlement on most of these exchanges, which is part of the reason why we're building what we're building at True Markets.
Yeah, no, I mean, I think it's definitely going to trigger some sort of run. I don't know if I heard a number in that in terms of where you think we might be at the end of the year. I think
it's hard to predict the number. Like, what's the crypto market in general? Like, could it be, a multi-trillion-dollar market? I think the U.S. equity market is almost a $50 trillion market, and then in the crypto market, bounces between 1 and 2. I would say that stablecoins itself are a very different market than like volatile crypto assets. So I would consider it its own bubble. To see $1 trillion is not like, wouldn't surprise me. I think the U.S. equity market is almost a $50 trillion market, and then in the crypto market, bounces between 1 and 2. I would say that stablecoins itself are a very different market than like volatile crypto assets. So I would consider it its own bubble. To see $1 trillion is not like, wouldn't surprise me.
A lot of Democrats have increasingly called out some of the fears around a potential bank run. We obviously, here at Coinage, covered what happened with Terra. Very different in terms of algo stablecoins versus what could happen in a bank run on a dollar-backed stablecoin like a USDC. And we saw that play out in the Silicon Valley Bank collapse. But I do want to play a little bit of what we pressed Cher Hill on when we asked about what Democrats have been raising around that issue. Just want to play what he told us and then get your take on maybe potential fears and how this kind of gets built around the old financial system. Here's what French Hill told us.
Systemic risk in finance is a top issue for Congress and for the bank supervisors. And we should, when we think about design of the framework and a dollar-backed stablecoin legislation, actually be thinking about what's the downside here? How could it work? How do you reduce concentration of risk? And I think we're contemplating that in these bill designs. There's no one in the world that has the transparency, auditing, capital requirements that we're contemplating in the Bryan-style House bill or the Bill Hagerty and Senators stablecoin bill. That helps.
Now, as we look at it, Vishal, it seems like we're approaching maybe finally getting a vote here in the Senate, perhaps. At least that's what it sounds like down in D.C. But it doesn't seem like there are necessarily any hurdles around what he just talked about, which I find surprising because it does seem like after Silicon Valley Bank happened, we did see USDC break from its peg. There were a lot of fears. I mean, how do you feel about how this process has gone in D.C.?
Yeah, I mean the process in DC is always, I'm a product guy. I went to Capitol Hill last week, and I think it's an eye opener for someone that I have a team of 10 people building an exchange, an app, and a bunch of other things, and we're really going as fast as we can. I think it's an eye opener for anybody in Silicon Valley or anybody that's like a builder in New York or anywhere else to go to DC and try to figure out where kind of the pieces are. But at the same time, I think that we see a lot of opportunity to build around the bill. I'd say one thing, I've survived, Terra Luna, I've survived, USDC, DPEG. I've seen all these things. I'd say a couple things. Number one, stablecoins there's a spectrum here. There's these algorithmic stablecoins and the dollar-backed stablecoins. Like the algorithmic stablecoins, like best case scenario, you're worth $1. Worst case scenario, you're not worth $1, and that's like an asymmetric downside you don't want in a stable asset. And I'm very pro dollar-backed cryptocurrencies. I think in the U.S. it makes a lot of sense. I think that the general retail user doesn't understand the risk around something a little bit more exotic. So we have to be careful about that. I think I was at Coinbase when the SVB thing happened, and we had already unified USD and USDC. I'd say there's a lot of things that we would like to fix in the stablecoin world as well. I don't think we're at the end state here. I think transparency is really important. It's really important to know where the assets are sitting. If they're sitting in short duration, medium duration, long duration bonds, if all the short duration bonds are, for some reason, held up at a bank, how do we, instead of stopping someone from burning the dollar, like how do we allow him or her to burn the dollar, but at a discount using using the medium and long-term bonds that sit behind the assets. The dollars are there, right? It's just more of every once in a while the railway is broken, and we want to be careful about those things.
Yeah, I think that was what's interesting is in the conversation, I didn't see too much kind of around that because, in crypto, it's uncomfortable. Crypto's all about no government bailouts. And then SVB was like, well, it's not just crypto that's caught up in that. It was a lot of startups as well. And it could have been bad news bears. And the Fed stepped in and we saw kind of everything play out the way that it did. Everything was backed and everything recovered. And now here you got Circle exploding its IPO. So everything worked out dandy for everybody. But it was kind of one of those moments where it's like, okay, we still have some work to do here. And maybe that, by the way, Vishal, is a good pivot into what you're doing over here at True Markets, because I think it's important to kind of highlight, not only do we have in DC the stablecoin bill that's getting pushed through, but then the next big thing is market infrastructure, kind of how all this fits together and what Congress wants to do to kind of codify how crypto plugs into traditional finance. And I guess, coming from USDC, coming from Coinbase, what's kind of the big thing that you saw necessary to tackle here with what you're trying to do at True Markets?
Yeah, I mean, obviously, like we both, we all saw the failure of FTX. We've seen the failure of many exchanges, and we know that we need to do this in a different way, right? Like, so the traditional coin, the traditional crypto exchange will, especially in the centralized world, will hold your assets. You give them dollars, and they'll allow you to turn it into Bitcoin or other volatile assets, and they'll hold them. They'll hold them for you. They're not only an exchange, but a custodian for you. Some of them offer qualified custodians, some of them don't. What we saw post FTX is that you can no longer just trust an exchange to hold your assets. So we're building a non-custodial exchange. And so there's really kind of three things that make us different. And number one, it's the separation of execution and custody, so non-custodial. So we use a qualified custodian to hold your assets. We use Paxos to hold your assets. So if you're buying Bitcoin, Ethereum, Solana, those assets will be held at a qualified custodian in a protected account. Number two, we're stablecoin centric, right? So that meaning we can speak any of the supported stablecoins that we'll support, like USDC, PYUSD. We do that by allowing the market to have a default stablecoin. We use PYUSD as our default stablecoin. PayPal's an investor. But if you want to use USDC to buy, sell, use as collateral, we can also do it. And that way we're stablecoin infrastructure. We're behind the scenes. We look like a stablecoin clearinghouse to a degree, and that allows clients to borrow, buy, leveraging these stablecoins without having to worry about am I picking the right flavor, which is, as we see fragmentation, we expect to see more need for this infrastructure. And then lastly, we're hybrid CeFi DeFi. So the last thing that we saw at Coinbase, and we were, at Coinbase, I joined, we were only trading 20 assets. We had no derivative exchanges. By the time I left, we had unified USD and USDC books, so they're one and the same. And then we went from 20 assets to 235 assets. So I was in charge of asset addition there. And then we launched two derivative exchanges, one in the US under the CFTC, and one a Bermuda-based perpetual futures exchange. Both are very successful, right? So we saw all these opportunities, but the one thing that we knew is that listings don't scale, right? You can't just list every single token right away. It's impossible. So there's a lot of benefits to the CeFi world. There's a lot of benefits to the DeFi world, but there's also a lot of problems. And what we've done is build a hybrid system that allows you the benefits of trading a Coinbase or Uniswap, but hybridization. So all within the app. So by the time this launches, you'll be able to trade on True Markets on your phone. Live.
Yeah, I think it is interesting. I don't know if you've been paying attention to James Wynn on X at all, but this trader that kind of came out of nowhere, started opening some pretty big positions. Everyone's been watching those, and then people wondering if, hey, is this a real guy or is this just Hyperliquid marketing here to kind of go after all the problems? And seeing that all play out has been very interesting. But I do think maybe people in crypto, certainly after we investigated what happened with Terra, Wintermute, market makers, people are waking up to kind of some inefficiencies in the market. And I feel like what you're just describing kind of gets into those weeds to highlight, look, maybe the old system wasn't built perfectly.
Yeah, listen, you have to do a redo every once in a while. Listen, I had a really good job at Coinbase. I appreciated the leadership of Brian and team. I was able to put my fingerprint on an exchange through IPO. There was a before and after me, essentially. Before me is 20 assets, after me is 235, two derivative exchanges, and unifying the stablecoin USDC into the platform. I'm proud of the work we did there, but the reality is, at some point, it's better to start over. And if you're working at a traditional car company and you want to launch an EV, it's going to be tough because everybody's going to say, "Well, let's just use the existing parts." I think we had a lot of really great investors that trusted us as core operators in the space, that believed that we could build the next version of what we believe to be, a safer, easier to use market and exchange app, everything. So, we're excited. This is I've known my co-founder for 17 years. This is our fifth business together. He's ex-Goldman, ex-Coinbase. This one's for us. We're building this with everything we've gained over the 20. I have 25 years of experience in markets. This one's for us right now.
Well, that's one thing that I'm kind of interested to get your take on, kind of where the market is sitting in terms of the partnership there, because as you said, Coinbase is a big dog. Coinbase got a lot of things going for it. Coinbase has, you look at what Circle's doing in terms of how much they're paying Coinbase just for distribution, and you got a lot of people attacking that. But at the same time, as you just laid out, Coinbase partnership does huge numbers. And so I'm kind of curious what you make of, maybe, I don't want to call them haters, but there are certainly a lot of people, and maybe we just did this with our Circle episode, looking at that partnership and saying, can it make sense? Can Circle really justify the price it's trading at right now if it's going to continually pay Coinbase so much money just to get USDC in the hands of people? And I don't know if you think there's other ways out there beyond Coinbase that USDC eventually will be able to distribute. But right now, I'm curious to get your take on that, considering how big Coinbase is for them.
Yeah, I think we have to be careful. I mean, I think that dollars are dollars, right? So USDC, I think one of the key benefits of USDC is the multi-issuer model, knowing that you could either mint to burn at Circle or mint to burn at Coinbase, and I think they've done a fantastic job with growing the pie there. And I don't see it as a split that is. I think they're stronger together than apart. They're stronger together as multi-issuers than a single issuer. I think that they've done a really good job, and I'll be honest, I don't think USDC would be as big as it was without Coinbase. And I think that, again, together they made this thing into a behemoth. Again, I would say Circle and Coinbase were both two of my favorite jobs for very different reasons. I think taking USDC from 0 to 1 was extremely hard and very interesting. We had a mantra at Circle, everybody would ask us why, why there's such few dollars in. We were battling TrueUSD, GUSD. We were kind of the last to launch in the pack, and we were gonna make shirts that said USDC, and on the back it was gonna say, "It's gonna take time, bro," because it was taking time, right? And at Coinbase, I love that job because we're pre-IPO. We could tell that the business wasn't scaled on the exchange side. We weren't ready for like scaling into assets. The infrastructure was actually really like incapable. And I brought my now co-founder Patrick on, who I've known forever, and he's a matching engine guru. And we were able to scale that business from like, again, I took USDC from 0 to 1, but this is like a 1 to a 100. And I found the leadership at Coinbase to be just really good at like allowing you to act as a directly responsible individual and kind of like building the business that you believe to be the best business. Now, where the market says Circle versus Coinbase, I think it doesn't matter. I mean, the reality is the U.S. crypto market is going to be big. It's going to be, there's going to be many players here. If you look at traditional finance, if you have a Goldman Sachs, you have a JP Morgan, you have a Citigroup. And, I'm happy with the work I did at both Circle and Coinbase, but this allows us to build what we believe to be another big venue, another big place to do work in crypto. And I want to make sure that we, keep people on task, make sure fees are good, make sure that, our lending business makes sense, make sure trading, is up and running. Like, anytime we had problems with the Coinbase exchange, itself, we would feel really bad because it was the majority of the way that the U.S. market would get their crypto. So if we're down, the U.S. crypto market is essentially down.
It's true. I mean, obviously, without getting into the weeds in terms of how other people are maybe approaching the U.S. crypto market now, because Backpack is currently being displayed on this interview, one of our sponsors, and of course, there's also OKX who's now looking at the U.S. market too. I just think, and you said you're a trader, Vishal, so I'm kind of, you probably know this better than I do. But if you got Coinbase sitting there at a $65 billion market cap and you got Circle now surpassing a $20 billion market cap, and you look at the numbers and you look at the businesses, there's a lot of people saying that, hey, wait a minute, that doesn't really make sense here considering how much money Coinbase receives from Circle and how big that business is currently trading, that there's a huge opportunity to maybe look again at Coinbase and maybe play some sort of ARB. What do you say to that?
I refuse to spread trade my two employers, my two priorities. I refuse to put that trade up online here. I respect Jeremy and his team. I still talk to Sean a lot. I respect Brian and Greg and the team I had over there. I think, if anything, they respect me for doing my own thing.
Yes.
I have nothing bad to say or a trade to put on. I definitely will not be spread trading Circle versus Coinbase personally.
Yeah. No, I think it's just interesting to think about. Again, I think it speaks to my take is that clearly, obviously, again, thinking about what really has changed since 22, obviously sentiment has swung hugely. We were just talking about this with a bunch of the people in the Solana ecosystem after they saw Solana dip to under $10 to where it's back trading to now. Just thinking about how huge sentiment has turned, and I think you and I talked about this in Prague too, just like the crypto winter, and thinking about any crypto project getting looped in with everything else and everything's fraud, and here we are, to where we are now. And obviously you can have your position however you want to take it on Trump launching his own meme coin, but to think that a president would even touch crypto just a few years ago is pretty wild. And now here we are. And so, I mean, I think about the opportunities. I think about still today misunderstandings on Wall Street about what crypto offers. And you got to say there's some huge dislocations in terms of valuing these businesses. And that to me, I think, is the main takeaway, is that there's still, I mean, I know it's a meme and I know we say we're early all the time, but there are parts of the market that are definitely flashing, hey, we might be early because people don't really understand these things. That's what I take away from it.
The interesting thing about crypto is we're both finance and technology built kind of in. And, I come from a background of finance and technology. And I think it's really interesting that like you can, I think every project out there that has a token almost has like, probably a ticker up all the time to like watch their token, which is, I think, actually kind of silly. Like, I think builders should be building, builders should be solving problems. USDC or the exchange or core infrastructure that people should be building on, or building the next versions of. And the reality is, I think we're a little bit too obsessed with prices, and we need to be focused on building real product that people really use. I'm obsessed with markets, and I think that I look at everything from the crypto spot market to the fact that U.S. equity is still not 24/7, and I see the proliferation of prediction markets, and I think that the team you see, the teams out there doing amazing things. Like that's exciting for me. Like, we call business true markets. Largely, there's a novel quote that came out of the state network in Singapore. He said, a group of people that come to consent, a group of people that think similarly and come to consensus is a mob. A group of people that think differently and come to consensus is a market. And that idea of coming to market and finding a price with people that are willing to buy and sell at those prices is like the truth. And that's how we came up with the name True Markets. And I do think that builders should build and worry less about the price, but we're still in early stages of crypto. If this is even inning two, I think we're still very early.
Well, I think it's obviously core to the idea of what we're trying to build here at Coinage too, in terms of a community-owned show with a bunch of different biases and different takes on things. People coming together to co-own what we're building here, which has been fun. So I agree in terms of consensus and trying to avoid echo chambers and things like that. I think on the stablecoin front, which I keep going back to, in a lot of our reporting, by the way, we just chatted with Paolo at Tether not too long ago, kind of about the way that some of these things start to fit in. Certainly with President Trump trying to launch USD1. And again, the opportunity outside the U.S., basically exporting dollars to emerging markets versus, as you laid out, USDC and trying to use dollars on chain here in the U.S. Two very different kind of opportunities out there, I think, fair to say. And as you see that, Vishal, in terms of Trump and leaning into some of those things, I guess one of the big questions is just what it means for macro in terms of U.S. dominance, dollar dominance around the world. Politically, It's been kind of interesting to see the way that some people are, again, getting back into the Bitcoin versus the dollar debate that was there before. I mean, how do you kind of see it playing out on a global scale? Because we did chat with Paolo, maybe I'll throw this at you too, just to put a finer point on it. And he was basically calling out MiCA and the idea of bad legislation over there because it could potentially set up the same thing we saw with the run on SVB and the depeg of USDC over there if you're going to regulate it the same way. So I don't know, but I think a lot of different jurisdictions are going to have to answer these questions.
Yeah, I think that what we're seeing right now is that the market wants to denominate in dollars, right? We see it both in the U.S. markets and obviously the global markets, and like the stable coins enable that, and the U.S. government should be leaning into that. They want the U.S. dollar to be the global currency. I think that traditionally our government's been afraid of the crypto markets and they've been afraid of stablecoins. And, finally we have a government that is looking at stablecoins as maybe a way of making the dollar stronger. And I think that that's right. And, if the market wants it, but you're putting up unnecessary regulations and, and making it extremely hard, or maybe not even clear regulations, then you're going to miss out. The stablecoins will go offshore. They're going to do different things. They're going to look different. But if you can build a robust infrastructure here that, there should be 1,000 flowers blooming in the stablecoin world. There should be not just, one stablecoin kind of winning. There should be infrastructure, and every bank should be launching their own stablecoin. That's going to be really important for the future. And I think the U.S. leaning into it now allows that to happen. And it'll be really interesting to see how much of the dollars end up in the crypto space. So you asked me for a market cap for stablecoins, and I'm like, I think it's the better question is what percentage of the dollars will be trapped into crypto, and that's probably a number that we should probably be charting.
Yeah, obviously it's been interesting to see that and kind of the back and forth. It was even when we were chatting with French Hill, he's like, look, people don't use dollar stablecoins to buy things, and I was like, well, they he was saying that they only use them for payments, not for like savings. And I was like, there are a lot of people who are using stablecoins for savings. And so there's still kind of, I guess, the market needs to figure out certain things, I suppose.
It's the use cases, right? Like the thing is, the use cases were originally really, really focused on the institutional, like settlement collateral of, hey, I don't want to take the dollars to a wire. Like, how can I settle this thing the better way? And now you're seeing it, kind of find its way to payments and things like. And Coinbase is doing a lot of work to like allow you to buy pizza with USDC, and that's really important. But like the use cases will start to pop up as it gets easier and easier to use them, and as regulations become easier, right?
Well, I do think, just to put one last question out there in terms of what you said around how many of these might pop up, I do think maybe we are approaching, hey, there could be too many of these, because how many do we really need is another question. And I guess you're right to point out that we're really just starting to see some of these, but where do you kind of put the number as, well, okay, X is too many, because it's kind of hard to keep up?
I think they're going to proliferate, and they're just going to be. It's not going to be. We won't look at this in number of dollar terms. Like again, like I think USDC is 99% of the US dollar denominated, US domicile. They own it, right? Like there's one big stable coin in the United States. PYUSD is I think 0.5%, right? So I think, even kind of saying it out loud, I don't think it matters. Like I think that you'll start to see these stable coins kind of find their way in their own little pockets. And the core here is that you need to build infrastructure that allows you to go between these stable coins like seamlessly. The dollar itself is commoditized because the dollar itself behind the stable coin is the same dollar, right? So, we shouldn't be worried about the number of stable coins, especially if they're all dollar backed. It's the infrastructure we should be building to allow for us to use all these different types of dollars.
Yeah, no, I mean, I think it's always interesting to see that play out, because none of these are ever problems until they are problems, as we saw with the runs on certain banks, or certain banks getting in trouble and then people realizing where they're custodied.
We need transparency on like where are the dollars actually sitting, what are they invested in? Like we need full transparency. So the market freaks out when they don't have transparency. The market freaks out when you can't burn the thing.
I don't know, because that was the irony behind the Tether thing, was because people knew where USDC parked their money at SVB. That's when it depegged, and everyone's like, well, Tether doesn't really say, so we don't know. And it's like, maybe that's better.
Well, I can't. I refuse to speak on Tether. It's just a different animal. It doesn't sit in the U.S. domiciled world. Like again, I think globally, I think there's a market out there that like is very interesting. I think the U.S. market is kind of my core focus right now.
Well, I think it'll be exciting to see what comes from True Markets as you guys get off the ground and get cooking over there. But I think, obviously, again, appreciate you coming on here to chat with us about what's going on the stablecoin front, and would love to have you back, Vishal, to talk about more of this as it continues to develop, because it's certainly not going away.
Yeah, by the end of summer, we should be, for Bitcoin, Ethereum, Solana, SPL, EVM, base tokens, we should be easier to use on an app. We should be cheaper, and we should be safer because we're non-custodial and your assets are sitting at a qualified custodian or non-custodial wallets through Turnkey.
Well, it's exciting to see all these different takes on how this should be built, and certainly as the rules get played out in the second half of the year, we'll have you back on to discuss kind of how it's impacted what you're trying to build as well. But for now, we will leave it there. Vishal Gupta, can't thank you enough for coming on, man. Congrats again on what you're building in True Markets. Thanks again for the time.
Thank you again. Bye.
All right. That'll do it for us. Per usual here on Coinage, you can co-own the experiment. We're growing as one of the largest and fastest growing Web3 outlets here in the U.S. Co-own a chunk by heading to coinage.media to co-own this with myself, co-founder Netflix, and everybody else here at Coinage. For Vishal, for myself, that'll do it. We'll see you again soon.